A news from one of the world's leading financial centers has a strong sense of deja vu about it. The free fall in the stock of Credit Suisse and a string of departures from the top signal that there is something wrong with the Switzerland's second largest bank. Its newly appointed CEO Ulrich Kuhner too had conceded that the firm was facing a critical moment and needed an overhaul. And just like Lehman Brothers in 2008, the financial cost of potential collapse of Credit Suisse would be huge. Our next report tells more about it.
Just a week ago, 14 years after the bankruptcy of Lehman Brothers triggered a global financial crisis, the liquidation of its brokerage unit ended. More than $115 billion was paid out to Lehman's 1.1 lakh customers, secured and unsecured creditors, and a trustee who oversaw the brokerage's liquidation and his law firm. Lehman Brothers had been US's fourth largest investment bank before filing the largest bankruptcy in American history by far on September 15, 2008, leaving over $600 billion in debt. Today, on the other side of the Atlantic, growing concerns over the financial health of Switzerland's second biggest lender, Credit Suisse, have sparked fears on whether the world should brace for another Lehman-like financial fallout. Its bigger Swiss peer, UBS Group, had received a state bailout in the 2008 crisis. Credit Suisse has been assuring staff, counterparties, clients and investors that its liquidity and capital position are strong. But its shares have fallen 55% over the past year, giving it a market cap of about $11 billion. This is lower than several Indian banks like HDFC Bank, Axis Bank, SBI, ICICI Bank and IndusInd Bank. One of the biggest banks in Europe, Credit Suisse had $1.6 trillion in assets under management at the end of 2021. It has wealth management, investment banking and asset management operations, besides a domestic Swiss bank. Swiss Central Bank had designated it one of the country's global systemically important banks whose failure would cause significant harm to the Swiss economy and financial system. The bank's credit default swaps, an instrument that measures the cost to insure its bonds, hit their highest level since 2009. CEO Ulrich Kuhner, who took charge in August, is attempting to restore the bank's profitability. Over the past 3 quarters alone, Credit Suisse's losses have hit nearly $4 billion, while ratings downgrades increased its financing costs. The collapse of US family office Archegos Capital Management cost the bank $5.5 billion last year. It suffered further losses from lending to the now defunct supply chain finance company Greensill Capital. Multiple changes in top leadership since 2020 and high-profile risk management failures have also attracted investor scrutiny. The bank is due to present a transformation plan when it releases third quarter results on October 27th. Credit Suisse had total assets of $735 billion at the end of June. The strategic review launched by the new CEO will focus on strengthening the bank's flagship wealth management business and scaling back investment banking into a capital-light advisory-led business. Asset and business sales are also on the cards. It is also evaluating strategic options for its securitized products group, a trading business. Analysts estimate it could face a capital shortfall of as much as $6 billion.
If I compare it with the Lehman movement, so when Lehman got bankrupt, they had an asset under management close to $600 billion, right? And today we are talking about $1.2 trillion. So the catastrophic effect can be much higher if the government don't support right now, because these kind of institutions can only be supported by governments. No individual, no other institution apart from government can support at this moment. So we all are waiting for the government response, how they are going to handle the situation currently. It will create a systematic issue for the entire European economy and at the time when they are already passing through a crisis. So I believe temporary, of course, will have a ripple effect. But in India, I can assure you, whatever impact will be, it will be very short term. So we believe, yes, we will have a technical correction once any of the banks go belly out across the world, whether it's a US bank or it's a European bank. But in Indian market, they will not remain down for a long time. You will always see a V-shaped recovery for Indian stock market.
Given the negative news flow, Citigroup analysts see significant execution risk in any new strategic plan. In the short term, they said widening credit spreads can exacerbate market fears and damage counterparty confidence as well as drive funding costs higher. And in the long term, the fall in its share price will further dilute its capital raising capability, and it will throw a spanner in the plan for any investment banking restructuring that Credit Suisse can undertake.
Now, with the serious being impacted because of the the almost sort of a very consistent pattern in interest rates rising, right? Have put almost everybody who were comfortable with low interest rates on a hook. You have to take this and read it with maybe another layer of understanding that how Eurozone is struggling. There is stress at a politics level. There is stress at an economic level. Now there is stress at the cost of money level. Banks are extremely leveraged institutions. And that's why they wind up so soon. Lehman Brothers, Bank of America, Fannie Mae, Freddie Mae, all these guys, they only needed hours to unfold. Right now, they are fearing this because that is one that will possibly, in my mind, have the maximum contagion. Thinking that if the bank goes bad and it will be an isolated case, I think is not the right manner. We have to realize that this will have an impact. Right now, when Credit Suisse is under the stress, your other banks also is going to feel the heat. So it will have an impact first in Eurozone and then the whole world for sure. Lehman Brothers unfolded on a Monday morning when people came to work. But here, we've already been talking about it for quite some time. There's enough room for everybody to adjust to it. We will not be immune to something like this going bust. If at all we are going to be affected, I can say this with confidence that we will be the first to bounce back.
Jose Antonio Alvarez, the CEO of Santander, one of Eurozone's biggest banks, said that liquidity in the banking sector was extraordinarily high and therefore did not see contagion risks in the sector. Even in the worst case scenario, any spillover from a potential Credit Suisse blowout will only have a transient impact on India's financial markets, whereas any contagion to Indian banking system is unlikely. Credit Suisse's Indian branch has a balance sheet size of just 20,732 crore as of FY22 end. But investors will be closely watching any action from the Swiss government and whether or not Credit Suisse will be able to execute its soon to be released restructuring plan.
Yeah. This was the news regarding Credit Suisse, which will be asked in interviews when you go for interview this week or next week. So please go through the reports about Credit Suisse of in Switzerland, because it is globally domestic, globally systemic important bank.